What's up? What's up? Welcome back for another recap video. Today we are going to be reviewing AVGR again. Yesterday we traded this one in this area on AVGR. First day now after that after hours squeeze from 6 to 12 that we were talking about yesterday. This thing was still in play for today, curled up. Had some action here at the open, very choppy at the highs. The dips were definitely king. We did hold up on all of these dips in this area and as well as this area, causing shorts to get caught, getting squeezed out for small loss until this stock does start to fade. Yeah, at the open, I took a dip and a nice quick pop on this for a decent trade. I did not trade up in this area because I knew that it is pretty weak at the highs. I remember that yesterday, so I didn't trade it at the highs, so I kind of let that kind of go, waiting for that next trade. I did, scalp it for a little bit up in this area, but not really looking for a huge push. We did get the green to red move, flush all the way back down. I was looking for a dip now below 882, which was the support level from pre-market. I wanted to see, test the strength of the support level. We did dip down. I was able to accumulate a small position here and selling it up at 915. We did hold around VWAP, and we did pop up and break $10 to slam back down to 920. Very whippy stock. You definitely want to be selling into the highs on this type of stock. I didn't really trade. I missed this. I didn't trade it as well as I could have, but I missed this push here. I remember it popping up here. I was holding, and it was holding. I was like, okay, this could squeeze out again, but I didn't put my money where my mouth was on this setup. Mostly because of my timidness near the highs on this stock. Always scared of that wick back down that we've been getting on this stock here. We did hold the 90 MA, which is a great sign. We popped back up and held, pushing all the way, overtaking this candle. This is always a good sign. So shorts getting squeezed here, here. Curl back down or fade back down and curl back up for a break of 1056, the previous high, or 1055, with a nice wick all the way up to 11. I know some traders traded this and nailed that one. Definitely a great trade. Now we faded pretty much. From there, we whipped all the way back down, faded, consolidated for the rest of the day until about power hour. We started to curl up, break VWAP. This is a classic after hours type of move, and here we are still ripping into the after hours. We did curl up and we squeeze out through the highs, and now we're making some moves here. So this is now considered a multi-day runner, and we don't know how high this could go. This is a very small float, under 1 million share float, so we really don't know how high this can go. Do I want to trade it here? I mean, it's breaking new highs. It's a multi-day runner. It's high volume consistently day after day. Who knows? Who knows how high this can go? On the daily, I mean, we do have low volume days, so very little resistance on this daily chart, which I do like. If you go by this far, you don't even know if this is still a stock anymore. But yeah, AVGR, I think we can go higher. And depending on tomorrow, we'll see what tomorrow brings. If this is going to continue to be a stock in play for a couple more days, bring some more sympathy momentum, that would be great. If this thing can go parabolic overnight, and we wake up and this thing's at $20 or $30, that could be definitely a spook to the market for the short side or the shorts, and give some more confidence to the bulls, and see if we can get some sympathy some Momo back in the market. That would be really nice. But AVGR, this is holding up quite nice. It's holding up quite nice. It's not like the yesterday and this where we spiked all the way up and faded back pretty hard. We're actually holding these support areas around the 9 EMA and the 20 EMA, so that's always a good sign that it's prepping up for another test of the highs. So it could be worth to take a small position here to see if we can get that retest of the highs, and then again scaling out into the breakout. That could be a trade here. However, once you start getting to after hours trading, the volume tends to start to fade off a little bit, and you don't want to be that guy stuck trading a stock that has only a few thousand shares traded per minute. That's when you can get stuck, especially if you're a bigger trader. You can get stuck with now taking slippage on your order when you are selling. For those of you who are taking, let's say, over 1,000 shares on a stock like this, there may not be 1,000 shares to sell at the price that you want. So yeah, after hours is definitely a whole different ball game because of that volume factor, and as well as you're trading. You have to be trading with limit orders. You have to be trading buying the ask or buying the bid, selling the ask or selling the bid, and that also can bring in another element of complexity when you're trying to trade pre-market and after hours. So it's also something to keep in mind. But we did hold this area here, could be forming a higher low up in this area, and maybe see something like this. Who knows? Maybe something like that. But we did have a really nice, and after hours, we had that nice push from 1050 up to 1250. Nice 1 minute pullback, 2 candle pullback to the 9 EMA, pushing into the highs. That's a beautiful pullback right there, topping out at 1335. But yeah, I'd love to see this stir up some momentum in the market. That'd be really, really nice. Today, for those of you asking or wondering, I am up basic green today. I am up about 111.51. So, you know, nice base hit day on AVGR. We did trade a little bit of ELUT, CNXA, but nothing really came much of it. CNXA was a penny stock that I really don't like to trade too much. I don't like to trade sub-dollar stocks too much unless it has a potential to break $1. And then it starts to get in that range, that price range that I really like to trade. ELUT, this one just had, I tried taking the pullback here at 168, looking for a break of 170, but there was just a lack of buyers on ELUT, and we couldn't really get any sort of front side going, so took small losses on that one. And AVGR was the only one that was kind of providing some sort of opportunity. However, it wasn't the best stock we've seen. Definitely tricky setups. A lot of these setups were not A+. They were definitely risky, especially if you're adding into the highs on this stock, because look, every time it breaks the highs, this is a break in a high, it dumps, break of the high, dump, break of the high, pretty harsh pullback there, break of the high again, dump, break of the high, dump. So definitely we want to be selling into those breakouts on that stock. And also yesterday we did have that same sort of action. A lot of topping tails up in here, resumption, lack of follow through. So definitely be careful on this stock, especially at the highs. We'll see how this opens up tomorrow. I'm not going to trade it after hours. I'm going to take my green, walk away. So far, I'm doing great in the month of September. I only have one red day, one small red day. The rest, nice green, consistent green days, which is great. That's sort of my goal right now, is just to get that nice consistent green, because that builds my confidence. And especially in this market, I am not at all pushing it. I am not taking big size. I am just taking the best quality setups of the day, trying to practice my stock selectivity, taking the best setups of the day and walking away with just a base hit is great. And when the market heats up again, then I can really start to push myself. I don't want to push myself right now because of the chance that I would suffer a severe drawdown in a market that isn't favorable towards the upside. It could just really, I could backpedal a lot more than I need to if I do start to push myself in this type of market and swinging for home runs and getting aggressive. The downside seems right now could be a lot more than the potential upside. So kind of just treading water right now until the market starts to give some more solid opportunity, and then I can get back on track with my goals of sizing up. And my first goal is trying to be a little bit more consistent with trading $10,000 position sizes and above. And I've even been starting to track those sized trades under my stats here. We can take a look. I did make a tag of every single trade that I've taken over $10,000 and marked it here. So every trade that I take, I will mark it as a $10,000 trade. And I want to track my statistics. I want to track how I'm performing as I'm sizing up, because I only want to be sizing up if I only want to continue to be sizing up if I am showing progress. If I am, every time I size up and I'm taking a massive dump, maybe there's some other things that I need to work on. But recently, as I can see, we've had quite a few trades here. I don't know how many trades we had. So about 7 trades over $10,000 position size. And I seem to be overall green. So if I can see an overall green P&L of trading sizes over $10,000, why is there should be no reason why I should be doing this more often. So if I can see with my own 2 eyes that my accuracy is just how it usually is, my risk reward is just how it usually is, then there should be no reason why I should not be sizing up, because I'm already proving myself profitable on $10,000 position sizes and above. So this should help me mentally be able to grapple with sizing up, because once you size up, it's hard to get used to those big swings in your P&L. It can really affect your emotions, especially when you see dollar signs that you're down, dollar amounts that you're down that you're not comfortable with, and that's just going to come with sizing up. But if you have those green days on those big size, that's should definitely make up for those red days, especially if you're already a profitable trader. So if you can track your statistics, and this is the power of tracking your statistics. If you can track your statistics and metrics on certain areas, especially with sizing up for position sizes bigger or the goal that you want to make for those positions, if you can track those and see that you're profitable in that share size, then that should boost your confidence to make that more of your foundation when it comes to making a trade. Eventually I'll get to the point where $10,000, that's going to be my small size. That's going to be my test trade. That's going to be my small size in a cold market. That's where I'd eventually want to get myself to. And then in the hot market, my dollar size will be more like $20,000 or $30,000 position sizes. And that's going to be the area where I will need to be grappling with then, and adjusting to those swings and P&Ls at that level. So it's just about shifting myself up the scale. It's harder than you think, but there's some tricks and mental tricks and psychological hacks that you can use to kind of help yourself and aid yourself climb that scaling ladder. And it's very, very difficult, but you can use these tricks, what I'm doing here with tracking your metrics on those specific position sizes, or just, mentally thinking like, wow, like I can just do the same exact thing, but just it's just all a mental game. It's just an extra 0 at the end of my position size, and so that's also going to equate with an extra 0 on my profit and an extra 0 on my losses. So if you can kind of detach from the amount and not have a negative emotional reaction to just a simple number on a screen, then you're definitely will be ready to bump up the scale a little bit because you're desensitized to taking bigger losses. So, and that's inevitably going to happen. It's going to happen. I'm going to take a loss on big size, and that's just part of the game. And I just have to take that and look at it. And if I do get into a drawdown, that's just me now adapting to a new position size. And I want to do this in a market that is more favorable to make that money back. If it's a hot market, you have a lot of opportunity to make your money back. And so the proper time to size up would be in a hotter market, because there's a lot more opportunity. If you get yourself into a drawdown or a couple of losses back to back to back, you have a lot more opportunity and wiggle room to get yourself back out, versus right now, if I were to start doing that, it could be a month or 2 months that I'm in the hole, and that's not something that I'm looking forward to right now. So that's why I'm kind of keeping it cool right now, and practicing my consistency, and practicing my stock selection, and practicing my setup selection, knowing which setups are A+. So that's also something that's very, very important, especially as you start to get a little deeper into your career. That's like the number one thing that's going to improve your trading is that stock selection, that setup selection, knowing which stocks to 10x your size, which setups to 10x your size, and which setups to take normal size or small size, because not every setup is going to be A+. So that is the practice for more intermediate and advanced traders, and it's definitely difficult to learn. So that's kind of what I am working on here. AVGR seems to be just fading volume more and more as time goes on. So I think I'm going to wrap it up here and call it a day. Come back tomorrow and see what the gap scanner looks like. So tomorrow, I know we have a potential rate hike. I know we have some sort of meeting tomorrow with a potential rate hike or pause or a rate decrease. So we'll see what happens with the market. The overall market still kind of holding in this area. It definitely seems like when the market is down and the market is fading, heavy volume to the downside, the small caps definitely do not seem to be running a lot. So maybe if we see a little bit more upside swings in the SPY, we could see some more action in the small caps. But that's not always the case. There's some times where the overall market is going down, and we see some momentum. So that's not always the case. I think it just depends upon the news catalyst. Have we had a lot of recent runners lately? What's the float on the stocks pre-market, and as well as the overall volume on the day. So I think that's more important than the overall market, but I do think that the overall market does have a play in the small cap sector. But I don't think it's like 100% related. I'd say more like 50-50. Sometimes it's related. Sometimes we'll get some massive gappers and the market is way down. So you can't really judge the small cap market based off the overall market. But yeah, that's it. I'm going to wrap it up here. Thanks for tuning in. Check out the links in the description. We have a link to Trade Journal. You guys can check out Trade Journal. That is the site that I was reviewing with my calendar. You guys can sign up for that free. There's also paid add-ons as well if you want access to artificial intelligence chat GPT an assistant, virtual assistant to help you analyze your trades. You'll also have access to mentor content You can have access to one-on-one mentorships with verified profitable traders. You can have access to Discord channels and much more. So check that out. Also check out my Discord in the link down below. That one is all access free. What else do we have in the description? We have some social media links you guys can check out as well. So check that out, and I'll see you guys in the next video. All right, peace.